Good morning everyone, welcome to Stock Market Analysis presented by Ray Financial. Today is September 30th, 2015. I just want to share with you Nifty. Hey guys, so what we have in front of us is the chart of Nifty, and we are just a day away from getting into October month. Now I want to go over these with you very quickly, and I will try and give you as much detail as possible, but I will look over the monthly chart, the weekly chart, and the daily chart. So let's start first with the daily chart, and before I go ahead, let me just bring up some tools and key areas that we should see where our support and resistance lie. So first thing first, this looks like a major area, but okay, we've broken it. The next one is this, and that's clearly where we took a bounce off. We bounced off from here back towards 8,000 levels, and then we are back down, and then now probably just moving sideways. But what I actually notice in this is if we maintain this as our area of support, and we zoom into the chart. So let's do that. Let me just first zoom into this chart. Okay, there we go. So this was the support area. It's about like 7,500. Now what I want to show you is that earlier in my previous video I had shown this as an area of support and resistance. Yes, there was definitely sideways movement, very choppy, and I was either expecting a break to the upside or downside, but in my mind I knew it was a downside because anyways the trend within this channel was a downward trend, and it was forming lower lows, lower highs every time the market was moving. Eventually we broke this area, and if you see, it tested once, twice, thrice, and then obviously there was a gap down. Actually, yeah, it gapped down, it tested, but then market just couldn't hold itself, so it came down eventually. Now what I want to show you is that this is again a great strong support area. See, because when the market fell, alright, it fell to this area and it bounced back so quickly. Now it's just moving sideways. So what I want to actually show you is that this area, the 7,500, is a good support area, and I feel that probably in the month of October, November, we might have a upward movement. Why do I feel so? Is because of 2-3 reasons. Let me share the first one. I'm just going to clear these tools and I'll draw fresh again for you. So here's our support, 7,500, and here is the level of resistance. Obviously this is a gap, this where it closed and then it gapped down, we couldn't fill, and then we gapped down again. And if we see, I don't know whether you guys trade patterns, but this is an inverted head and shoulder, and this is the neckline. So possibly we might move back into the 8,000 level, and then from 8,000 we might try and come back and fill this gap. So, and again, if we come till here, then another major aspect is the 200 DMA. We might test that and again start moving downwards. To be honest, since the Fed rate is actually end of October, I have a feeling that they are going to increase the rate, but I don't know whether it's going to be in October, November, or December. I have a strong feeling that either it's definitely happening in one of these 3 months, and if it does not, then I feel that for January or February of 2016 they will increase the rate. Now why do I feel so is I'm just basing it on technicals. So this, at least for the daily, where we are moving to the downside. If you feel that this pattern if this pattern might not work out and the market may not rally back into the 8,300 levels or fill this gap, then what I feel is that let's see where we have support if we break this. Now I'm gonna draw this line from here all the way here. So let's always look back to the left side and see where the market bounced. So this was one area, this is another area, and then we have it like down here. Now these levels are somewhere close to 7,400, and then this one would be about 7,050. So yeah, if we see further downside, then 7,050, probably a bounce back, because it's going to go like lower lower, lower high, lower low, lower high, and probably that's how I would want it to move. And you know, if it just moves in one shot, then pretty much panic everywhere. So this is at least for the daily I have marked. I gave you my inverted head and shoulders, I have given you the support areas. If it doesn't play out, if the inverted head and shoulder does play out, then where should you exit? Well, it's about the 8,300 level. I would give and take 100 points less, so 8,200 is where I would feel safe and just exit if you made any profits on any of your stocks. Now let's just get back to the main where we see the market heading actually moving forward. Now I want to go into the monthly. The monthly is because it's giving us a more bigger picture. Let's just mark our prior areas where we've seen the bear run. So this is one, and this was another one because of the double top. And is this another area where we might see a bear run? Well, let's just check it. This was January 2009. January 2009. Yeah, so it was about the end of 2008 and the beginning of 2009. We kind of found support here. So basically what I'm trying to say is that after every 8 years there's a phenomenal move. It's towards the downside, always taken place. So if we go back and you see in 2000 there was a fall, 1992 there was a fall, so 2008 there was a fall. Now what I feel is that we are repeating the same pattern. We have made a great rally and we fell, we picked up double top, we kind of corrected a little bit, an opportunity to buy, and then again we had a substantial rally. Now this is again 8 years. So, and we have started to see a little bit of sell-off. It's not going to be exactly January 2016, but the market starts offloading some of its portfolio, some of the stocks that are in profit, and there is choppiness. So I feel that this is a key level to watch out. We need to be careful how we trade for the next few months, but at least for the daily I have shown you what my expectations are. Say if this does plan out, say the 8 years does turn out to be what it always has, and the market does drop, where would the market drop to? So my first area is this particular level. I'm just going to close this so I can get my horizontal line and mark the levels. So 6,200, 6,200, could be even 6,000, you never know. Market always gets very choppy, and you might start seeing a lot of buying opportunities within these levels between 6,000 and 6,200. Maybe it might even get into 5,000, but it's still far away. I am in the monthly chart, but right now 6,200 is where I feel that there will be immense support and people will start buying stocks in order for the market to push up. It will be a great opportunity to enter great valuations. So this was my monthly analysis, and if you see, it's pretty much it's rallied, and then there was a green candle, a big red candle that took over the previous two candles. That's one of the technical candlestick patterns that I always look for. However, right now where I have seen is that this red candle, it only took out this green candle. It failed to take out the previous two. But right now, if you see this one, it took out this candle and it took out this candle. So it took out the previous two candles. So it's, for me, it's a very important sign. Like, I would keep a watch out. I know we are definitely not going about this. I mean, I don't think so. But this area, which is again in that play, the 8,300 level, which is in the play, that is what I'm going to watch out using my daily analysis. But the monthly, I would be careful. I think we are soon to enter a bearish run. Now let's get it into the weekly, and I will end this video. So the weekly, pretty much the same thing. Like, obviously there has, if I just move back, okay, let's just move back. I'm trying to zoom in as much as I can. I don't think we need the RSI. So there we are. Now if we see, there was really strong rally. Now this is December 2007. Let's get to September. So this was July, September, choppy. We witnessed some choppiness around here. I'll just around here, and then September took off. Probably not how our September took off. And then it started to get choppy here, and then finally January we gave up, and then we came all the way down. Same thing happening right now. If we look, this is better. So let's get 2014, 15. So June, July. So basically we kind of rallied out here, but then we fell, and now it's sideways movement. So my analysis is that keep this as your strong support area. All right, from where the 7,500, and you have this gap to fill. Plus you have the sideways movement. This, we've already played out the downside. Then the market rallied, but then it again broke. If you see, there is a channel. This is the channel. Then this was the channel. Now I'm thinking like it will probably fill this and go back up. Like I just drew that very badly. Just give me a second. I'm gonna draw that again for you. So this was the channel, this was the channel, then we had the upside. Okay, then we have this downside. Okay, now yes, there should be an upside like this, which will fill this this gap. We need to fill this gap. I'm going to put in another. Let's go with red. So we need to fill this gap. Or let's just take white. I don't think that helped. Yellow, green. Okay, green is good. Okay, I don't know what's happening. I'll just mark it out using this red. So this area, we need to fill this gap, and I feel that can just play out right now, October, November, December, provided that like I said, the Feds might increase the rate, they might not increase the rate. If they don't, I definitely feel that January, February, we might see an increase in the rate, and then the 8-year period begins, and then we might have to move to the downside. Anyways guys, this is my analysis for Nifty. Today the market is up 60 points. I'm quite happy about it. I had a few stocks that I bought over the period of the last few weeks, and they have gone into green. But anyways guys, safe trading, be careful, preserve your capital, and if you have any questions, just shoot me an email. I wish you the very best and good luck with your trading. Bye bye.